Cal-Maine Foods calm stock down 25% since all-time highs, but zooming out to the past 5 years, the stock has done well, up 112%. So where does this egg producer go from here? Is calm stock a buy? I want to talk about calm stock because my model detected calm as an undervalued stock. The value finder on udomo.com detects stocks growing financials faster than the industry while trading at multiples discounts. This divergence in growing fundamentals versus stock price could lead to buying opportunities. For the full list of undervalued stocks, check out udomo.com today. I'm running a 7-day free trial for Udomo Pro. No credit card required. Creating an account is free. Let's look at the calm financials. The financial growth has exploded in the past couple of years. 2025 revenue was 4.26 billion, gross profit 1.8 billion, and net income at 1.6 billion. The economic landscape was perfect for calm, egg shortage, acquisitions, input costs becoming cheaper, lead to improving financials. The virus led to a depopulation of tens of millions of commercial layer hens across the U.S. industry. In late 2024 alone, over 13 million hens were lost nationwide. This supply shock caused egg prices to dramatically increase. The reduced national supply caused the average selling price of eggs to jump nearly 60% year over year. In early 2025, retail prices in some regions hit record highs of $6 per dozen. We also had margin expansion. In quarter two of fiscal 2025, Cal-Maine reported that feed costs per dozen were down 12.8%, leading to massive gross margin expansion from 17% to 37%. The company is also aggressively moving into specialty egg markets, cage-free, organic, and pasture-raised. These provide higher premiums. Consumers' demand for specialty eggs remain robust despite inflation. And legislation. New state-level regulations like California's Proposition 12 mandated cage-free eggs, and Cal-Maine's early investment in these facilities allowed them to dominate those high-priced markets. So here we have a company increasing their financials, no long-term debt, making acquisitions to grow their family of products, and along with experiencing favorable economic conditions that favor them, increasing output prices and lowering input costs. Calm is estimated to control 20% of the egg consumption market share in the U.S. So where does Calm stand from a value perspective? Calm stock valuation ratios are on a decline, which may indicate Calm stock is trading at a discount. I have this Excel spreadsheet, and I'm using the Udomo API to gather income statement data. Check out udomo.com and create a free account to get your free API key and easily download financial statement data into Excel, Power BI, and Python. You can visualize net sales, gross profit, and net income over time, and we see an overall increase in fundamentals. However, simultaneously, the price to sales has been declining. The price to sales was 2.2 in 2010 compared to today at 1.12. From a revenue standpoint, Calm is trading at half off. Price to gross profit is also going down. So is price to earnings at 30 in 2010 compared to now at 5. If Calm may trade at the average price to earnings, price to gross profit, and price to sales, Calm could experience some massive returns. For example, the average price to sales of Calm stock was at 1.55. Calm is currently at 112. Calm, going back to the price to sales of 1.55, would put the market cap at 6.6 billion, which translates to a stock price of 137. Calm is currently at $87 a share. This would be a 58% return. The potential return based on price to earnings is even more massive, a potential 540% return and a price potential of 560. Now, these price targets sound amazing on the surface, but these are simple valuation models only considering Calm's historic valuations. In reality, Calm is a cyclical stock whose performance is heavily reliant on egg prices and the demand for them. As the largest producer and distributor of shell eggs in the United States, its financial performance is directly tied to the volatile market driven price of eggs, which tends to move in boom and bust cycles. And this is reflected in the data. This is a scatter plot of the egg prices compared to Calm's annual revenue. The red line is a regression line, and this relationship between egg prices and Calm's revenue is able to explain about 34% of the variance between these two variables. So, we learned that egg prices are a big factor when predicting Calm's annual revenue. So, where are egg prices going? This is the average price of grade A large cost per dozen eggs in US cities from Fred. We can see times of volatility in egg prices. The most recent peaks in price is because of bird flu causing supply shocks. First, in 2023, we had the initial supply shock. This peak followed the start of what became the largest bird flu outbreak in U.S. history. There was massive culling because the virus is nearly 100% fatal to poultry. USDA policy requires the entire flock to be euthanized if a single bird tests positive. By early 2023, tens of millions of egg-laying hens had been lost. This caused production delays. It takes roughly 5 to 6 months for a new chick to reach egg-laying age, meaning the supply could not recover quickly even after farms were cleared of the virus. And finally, there's input costs. This spike was further aggravated by post-pandemic inflation, which drove up the cost of chicken feed, fuel, and packaging. And there was the second 2025 spike. As shown in the chart, the 2025 spike was even more severe, with prices hitting record highs of over $6, and in some regions, even $8. This was driven by a quote-unquote perfect storm of factors. Resurgent outbreaks, a more violent strain of H5N1 returned in late 2024 and early 2025, devastating flocks in major egg-producing states like Iowa and Ohio. By March 2025, over 166 million birds have been affected since the start of the 2022 outbreak. There were regulatory shifts. On January 1st, 2025, new cage-free mandates went into effect in several states like Michigan. These systems are more expensive to operate and have a lower bird density, which permanently raised the price floor for eggs. And there was also cross-species transmissions. In 2024 and 2025, the virus began to spread to dairy cattle, creating fresh logistical hurdles and biosecurity concerns that added risk premiums to the entire agricultural market. Since the 2025 outbreak, the egg prices have been declining fast. In financial theory, there is something called mean reversion, which suggests asset prices, earnings, and other metrics eventually returning to the long-term historical average mean after extreme fluctuations. It assumes that high-priced assets will fall and low-priced assets will rise. Bird flu is a black swan event for the egg market, and we are seeing prices return to the 200 simple moving average, which is in green. We could expect egg prices to return to around $2.11. Assuming that egg prices will be around $2.11 in 2026, this is correlated with an annual revenue of $1.8 billion by Calm, which is much lower compared to what Calm delivered in 2025 at $4.2 billion. Given Calm's historic price to sales ratio of 1.5, we could expect Calm to trade at $58 a share, which is a 48% decline in stock price. We also need to consider for input prices. These are the raw goods needed to make the finished product, which is eggs. Let's look at chicken feed. After all, we need to feed the chickens so that they can get to egg laying age. We see chicken feed peak in prices in 2012 and 2022. So let's see what happened there. Seen in the chart, feed prices surged toward a peak in late 2012. This was primarily caused by the 2012 North American drought, which was the most severe drought to hit the United Midwest in decades. Corn and soybean scarcity. Because corn and soybeans are the primary ingredients in poultry feed, the massive crop failures in the Corn Belt caused immediate and drastic price increases. There was also inventory depletion. Low beginning of year stock meant there was no buffer to absorb the harvest loss, leading to a producer price index for feed to climb toward the 290 mark. Then we have the peak in early 2022, where the index exceeded 300, which was driven by a combination of factors. We had the Russia Ukraine war ongoing. Ukraine is a major global exporter of corn and wheat. The invasion of February 2022 disrupted global grain supplies and caused a massive spike in commodity prices. There was also energy and fertilizer costs. Sanctions and supply chain issues led to record high prices for natural gas, which is used to make nitrogen, fertilizer, and fuel used to harvest and transport, which trickled down into the final cost of processed feed. There was also post pandemic logistics, lingering supply chain inefficiencies, and high demand as global markets reopened, kept prices elevated throughout the year. We see that chicken feed prices have returned to the mean, which is in orange. Input prices seem to have stabilized. Plotting the input and output prices together helps tell the story of why Calm stock went up a lot from 2023 to mid 2025. Chicken feed was getting cheaper as egg prices were getting more expensive. In other words, it was getting cheaper to produce eggs while they can sell it for more. But input prices have stabilized. Oil prices are getting a shock because of the ongoing Iran US conflict, and egg prices are declining back to the mean. These macroeconomic trends point to a further declining Calm stock price. It is worth noting that management is trying to tether away from cyclical dependencies through acquisitions and moving from conventional eggs to specialty eggs and prepared foods. For example, Calm recently acquired Echo Lake Foods, which makes pre cooked breakfast foods like eggs, waffles, and toasts. But it is worth noting that these are complementary goods to eggs, kind of like the hot dog to buns. You are more likely to have one with the other than not. It could be argued that these breakfast foods are correlated with egg demand. Also, might I add, I love this website from Echo Lake Foods. It's so to the point and nothing fancy about the website. It kind of makes me laugh. I love it. It's awesome. Like, man, if you want pancakes, there you go. That's what you get. Either way, it is good that Calm is diversifying, but Calm is still an egg producer at the end of the day, subject to cyclical egg prices and thus volatile in stock price. Conventional eggs make up 47% of net sales. If you combine conventional with specialty eggs, that becomes 84% of Calm's net sales. Specialty eggs may provide larger margins, but are still subject to overall egg prices, and consumers will downgrade to conventional eggs or opt out entirely of buying eggs in hard times. Prices are dropping fast to the historical average. Input prices have stabilized, and oil prices are currently getting a shock, which can drive up transportation costs. Is Calm stock a buy, in my opinion, today? Currently, no, I do not think so. The input and output prices are now going against Calm's favor. Long term, yes, Calm can be a staple in a portfolio. Eggs will always be here. AI can't easily replace raising chickens yet. Plus, Calm pays out a nice 9% dividend. My value finder did flag Calm. The model says Calm is trading at a discount compared to competitors while growing financials faster than the industry. So that is a good sign. Simultaneously, I would also prefer to see more predictable financial growth. Calm would have to prove that the recent acquisitions can cover the loss in net sales from declining egg prices and continue growth through product diversification. Simultaneously, I think there are other more enticing opportunities in the market. I bought 3 new stock positions in the Udomo fund instead of Calm. Check out udomo.com to see all of my positions in the Udomo fund. Thank you for watching my Calm analysis video. If you enjoyed, please like and subscribe. Comment on the video. It helps the channel and I appreciate your support. Check out udomo.com for financial API and stock dashboards to level up your stock analysis. I will see you all in the next one.